Hello viewers, in this video I'll be going over natural gas, ETF ticker symbol UNG. Today we just made a new low and we are down 2.2% on the 1-hour chart. We are heading over sold territory on the RSI. As for the 4-hour chart, we are also touching oversold territory on the 4-hour RSI. On the daily chart, what's concerning, if you're betting long, is we may have more room to head lower. Reason why, we see the daily RSI has not been oversold yet, so that may be a possibility. And if today doesn't close with any candlestick and close as is, we may continue down lower. That's a concern. So as for support and resistance, is making much lower. I would say there's not much direction I could point because this is at all-time lows. But as for resistance, if this were to reverse and head on higher, the first resistance will be the 9-day moving average. Reason why? We found support right here and support right here. And when in a downtrend, past support act as resistance. So that is our first immediate resistance at the price of $19.26. So if we were to reverse and head on higher, that price movement is roughly around 5.3%. And let's head to the forecast model. So on here, I'll go day by day where natural gas will head to in the next coming days. So 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these we should look at or focus the forecast on? So first, I'll reason why this trend is similar to the current trend right here. And this trend in question is November 14, 2012 to for February 12, 2013. So I'll prove to you why these two trends are similar and why the forecast should be somewhat similar. So what we have in the beginning of the trend, touching the upper Bollinger Band, and then we proceeded to head down lower. And right here, we touch the bottom Bollinger Band right here as well. And actually twice right here, and then we made a reversal to touch the upper Bollinger Band for a short term, and then we immediately made a reversal to touch the bottom Bollinger Band right here. So we start to see similar patterns shaping in the 2012 to 2013 trend. So what we have in the beginning, once more, touching the upper Bollinger Band, and then we proceeded in a down channel for several days. And right here, we touch the bottom Bollinger Band twice, one right there, and next right there where we immediately made a reversal, or this should be red, and then we proceeded to head on higher to touch the upper Bollinger Band, and then after that, once more, touch the bottom Bollinger Band for the third time. So what we have is 1, 2, 3, 4, 5, 6 points, and 1, 2, 3, 4, 5, 6 points. So there's reason to believe if the trends and patterns are the same, the outcome and forecast would also be the same. So back to the forecast model. Again, we should be focusing on forecasts on November 14, 2012 to February 12, 2013. And back then, natural gas was only up 35 basis points. So most likely we will encounter sideways price action, not much volatility in next coming days. So that is all. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.